U.S. is in a league of its own. Oh, good movie.
Oh, that is my favorite baseball movie.
There's no crying in baseball.
Tommy Hanks, man.
You
Mm,
keep missing the cutoff player.
yeah, a great film. Peaches, man, the Peaches. When they
Well, my fa
traded Kid, when they traded Kid to the whatever yellow thing, wow. Sister against sister. I think Dottie dropped the ball on purpose. I said it.
um, I wished that Jon Lovitz got more time in that movie. Remember John? You know,
Dude, you're on one today, man. You are on a movie one.
he is one of my favorite favorite
You
actors.
referencing Jon Lovitz. Veronica, chop this intro up. This is a cold open for the rest of the year. You got
You know
so
what
much.
else Jon Lovitz did that I loved? You saw Rat Race?
No, that's the one that
No?
has Mr. Bean in it too, right?
Yeah, Whoopi Goldberg and Cuba Gooding
Yeah.
Jr.
Yeah, that was like the Expendables, but different and earlier. Yeah.
You need to see Rat Race. It was so good. Jon Lovitz plays a hilarious father with wife and two kids, and he's amazing in the movie. And Mr. Bean, I think, has narcolepsy. He keeps falling asleep.
Yeah, I think that is correct. That's
But you
fun.
would love it. There's a scene where a bunch of rich guys are sitting in a hotel room. I don't know if I ever told you the story before. I won't ruin the whole movie, but this was sort of sidebar. A bunch of rich guys sitting in a hotel room, and a maid comes in, and they're like, "Would you eat strawberries and whipped cream off of somebody else's toes?" And she's like, "What? No, that's disgusting. Why would I do that?" He's like, "How about for $50?" She's like, "No, I would never do that. How about $100?" And they keep raising the amount until finally she says, "Sure." And then everybody comes out from behind the couch and behind the drapes, and they said, "Who had $200? That person won." They were betting on how much it would take to get her to do that because the men had too much money. They didn't know what to do with it.
Wow. It's incredible.
Great movie. You gotta watch it.
So the natural next question is, what's your price spread?
More than you have, Marcus. Welcome, everybody, to an exciting episode 54, recorded on March 19, 2024 at 4:50 p.m. Exactly. You ready to do this?
That was a wonderful open. I'm very ready.
Thank you. First chart here. Let's cut right to the chase. 401ks are being raided. OMG.
What?
Okay, so we have a chart here from Vanguard showing the number of 401ks that have had withdrawals on them. It was averaging about 2% before the pandemic. It hit 3.6% last year. This is really scary news, but wait, it's not as scary as you think, Marcos. So be clear, you can only take out half of your balance or $50,000, whichever is less. So most of these are not going to be large amounts. And did you know that in 2023, more than 75% of these distributions totaled $5,000 or less, right? They also say that good news, because of a lot of companies putting these auto escalating features, wherever you put in more and more and more automatically as
Yep.
your comp goes up, that workers are now saving 11.3% of their salary. That is up from 10.4% in 2016. Good job, workers.
That's awesome. Good job, companies offering 401ks and putting in their plan structure, auto escalation.
So we talked about this a few months ago about, people were tapping out, where were they getting their money, higher credit cards, I guess a little bit from their 401ks, but it's not anything that's like urgent red alert. Like this is a huge issue. It's a small number of people who are taking on a small amount of their 401ks. I'd hope they would do loans if they had the option, as opposed to a withdrawal. At least pay yourself back over time, but it's still a small amount.
Yeah, I am not worried because they are still spending.
Well, yeah. I mean, if it comes out one end and, if you're still spending and then taking out the other end, that's not really accomplishing much.
All right, fine. You don't like that one? I'll give you this one. Household debt service ratios. Basically, the percentage of your income that goes to servicing debt and the like. It was 18. Yeah, topped out around 18% in the GFC, aka the Great Financial Crisis. Right now we're at 14%. That is up from a low of 12.4% January 21.
Yeah, but I don't think this would count in that equation, right? You're talking about
No, I'm
debt.
just talking about the consumer. All these folks that have 401ks are consumers, right?
Well, right. But if they stop taking out mortgages and home equity and they instead take it out from the 401k, it's not going to show up, and yet debt's going up.
Yeah, but at least they're not servicing debt with that money. They're going to buy a thing.
Yeah, another watch. Great. Okay, chart number 2. Moving on. We're going
Next,
to
man,
talk
let's go.
about Bitcoin, which is
Never
my
heard of
least
it.
favorite topic to talk about, but it just hit over 70,000, probably at like 150,000 as of today, because this was a couple days ago. But oh my gosh, the amount of money going in there. So I'll give you a couple of stats here I found very surprising. Investors have plowed $20 billion into these new Bitcoin spot ETFs since January 11th. Oh my gosh. Um, Thankfully, though, we are still not recommending it, and we are in the majority. All the big other financial institutions out there, such as Morgan Stanley, Merrill Lynch, UBS, and others, are not offering it either. They're not recommending it. If somebody calls in, they might allow them to purchase it, but there's a lot of reputational risk and a lot of legal risk in recommending something that has so many bulls and bull and bear markets associated with it. So I'm still not sure what it should be valued or why it's valued where it is. There's a lot of money going into this. It's mostly individual investors. We haven't seen a lot from these large investors. I think you made a point a few episodes ago that a lot of people are just holding it. They're not even buying and selling it. But clearly people are jumping on board to try to get into this.
Yep, makes sense. ETFs, while expected, have seen a crazy amount of flows. Yeah, you quoted the number. It's an exciting one. I looked at it and I pulled it up now to see if it changed much. The IBIT ETF, which is BlackRock's or iShares ETF, that's the largest one. The larger get larger. Thanks, Larry Fink, for the wonderful product. That launched January 11th or so. Since January 11th, Bitcoin, like spot Bitcoin, basically, if you bought it at Coinbase, for example, is up 45%, and the Bitcoin ETF is up 37%. So not while that might seem like a ton of tracking error, I wouldn't judge that too harshly over this short period of time. We shall see how that looks over time. We'll be sure to track it and report on it here. I have no idea how to value Bitcoin, but it is scarce.
Well, the fact that nobody else is valuing it or wants to make a recommendation probably suggests that they're in the same boat, right?
Yeah, I don't know. I think it'll be an interesting shift in the narrative when Bitcoin folks stop translating it into US dollar prices.
Okay, we'll see when that happens. I know nothing about this subject, so I'll leave it to Alejandro, our Bitcoin expert.
Oh man, he got the he's gonna hate that. That's so good.
He's the guy. Okay, third chart of the day here, moving on to profit margins. So
I've
this
heard of
is very
those.
exciting. Corporate profit margins are up dramatically in the last few years. Let me read you some numbers here. Between 2019 and 2022, corporate profit margins are up from 13.4 to 17%. Everyone said this is all due to this supply crisis, to demand. Everybody had all this money from stimulus. They spent it all. Nobody can get enough goods in place. So companies had a lot of pricing power. So they raised their prices and they had a lot more profit margins. However, that sort of has gone away, right? Even the Fed has said most of the supply side shocks have gone away. And yet the profit margins have still only fallen from 17 to 16.4%. So again, 13.4 up to 17 and only down to 16.4%. What they're saying is that could be to what you said earlier, that the amount going to debt is very, very low. In fact, 1.3% of revenue is going towards debt, the lowest since the 1960s. The profit margins are the highest in the 1960s. And they were talking, interestingly enough, that for consumers, they'd say that prices rise like rockets and fall like feathers. If you're a company, you raise the price very high when you have a supply shock, and that eventually when that goes away, people have to do it, they have to buy it. When that supply shock goes away, you lower prices a little bit because people got used to paying that higher price. Doesn't seem fair, but that's sort of, I guess, what happens in life.
Yeah, so but flip to the other side, what have wages done? They're outpacing inflation,
Well,
but nobody cares.
recently, the one
Over
who,
the last 3 years now, wages are now outpacing inflation. Like that's it. You're getting paid more. Here's the problem, and here's why inflation is the the jerk in the room. Because people feel it when they're at the grocery store buying bananas, and that doesn't feel discretionary. They're not saying, "Gosh, my trip to the Bahamas, that is just, oh, it's so expensive right now." They're saying, "What? This friggin' banana is $12." I'm exaggerating, but I think that's the problem. Even though they can afford the $12 banana, it still feels terrible to buy a $12 banana.
of course it
Um,
is, because they complain, because they want to complain, because they are buying these fancy trips and they're buying these concert tickets and they're going crazy on other stuff. And they don't think about, wow, like 5 years ago, I was making a lot less money than I made now. But no, that doesn't go into the equation. It's just how much prices are.
well, it's hard.
But it's
Where
all Biden's fault, right?
what? No, I thought it was Trump's fault.
Oh, no, politicians, it's all politicians' fault.
Oh, I always get confused. I always get confused. But last thing on earnings, because it's incredible. Earnings are doing their thing. On January 3rd of 2022, Brett Horowitz, do you know the exact level of the S&P 500? You're right, it was 47.97. You nailed it. I knew you would get it right on the
This is the
nose.
one that I knew.
I was it? I didn't want to put you in that position and have your dad yell at me again.
Look, I've not asked you to predict any of my statistics today, right? Let's be clear.
No, because you know I'm gonna get them wrong, and I would look like a fool. So it was 47.97 S&P 500. That was the level on January 3rd, 2022. And the price earnings ratio, so a valuation metric on a forward basis, so what earnings look like, whatever price is now, was 21.4. So the S&P 500 was trading at 21.4 times earnings. Awesome. March 18th, 2024, what does the S&P 500 sit at? 5,149, which is more or less than the 47.97. It is more. But you know what? It's cheaper. It's now trading at 20.6 times, which is still above the long-term average of roughly 16 and a half times, the 30-year average. One standard deviation from that 16 and a half would be 19.8. So at 20 times, you're a little bit over one standard deviation, overvalued, so to speak. But guess what? We're less overvalued than we were January 1st of 2022. So there you go.
Thank you, the consumer. Keep spending. Just don't take out your 401k, but keep spending. And keep saving. I mean, if you're saving, then you're doing a good job, but
Just keep the auto escalation going. Such a beautiful thing.
it is. It is. Okay, last one I got here is AI. NVIDIA is only up 4,625% in the last 2 days. I exaggerate a little bit. It's only up 250% since April of 2023, basically 12 months ago. And the surprising thing is there are a lot of, not maybe this is not surprising, but there are a lot of AI ETFs, broad basket of AIs companies. So if you didn't want to have to pick the winner, you pick a basket and hopefully, that would do well because you'd have the winners and the losers in there versus trying to pick the one winner. Out of the 17 ETFs that specialize in AI and what they call disruption technology, Marcos, how many of them are outperforming the S&P 500 over the last year?
Can I guess? Hold on, I'm trying to comb through Jason Zweig's blog here. I
We
know
only have a short episode here. Come on.
five. No,
Three,
zero.
only three.
Okay.
The problem is that the gains in the AI world have been so concentrated in such few stocks, and that most of these AI ETFs don't want to have so much concentration in their holdings. They wanted to, disperse it out. So you got a lot of different names in there, a lot of different ideas. So yes, this was from Jason Zweig's article. At the end of the article, he basically said the best way to profit from AI might not be to own AI companies themselves, but own the entire stock market that would consist of AI and lots of other companies in there. Because again, S&P beats everything.
Ah, damn that S&P. Undefeated. Bert, if you don't know what a positive skew is in a normal distribution, you should go taste the Statistics 101. And that is the reason why those funds are never going to beat the individual stocks. It's never going to happen.
Is this kurtosis?
Yeah, it's something like that, but it's.
Can you explain
I think I
kurtosis?
think I had a drink in Charleston called the kurtosis.
Really?
No,
Some
no, no, no.
some financial planner that got a weird sense of humor.
Yeah, I know that would be wonderful. I love that. I no, I can barely spell kurtosis. It starts with a K though. Yeah, so yeah, this is the issue, but it's also the beauty of the markets and why the S&P 500 is excellent. Even though the majority of the S&P 500 companies underperform the benchmark, the fact that there's some winners that are so damn big help pull up the average in a beautiful, beautiful fashion. The problem is if you don't own those few winners, you're SOL, as they would say.
Yep, can't go backward and get the old performance. Got to get it going forward. The best
No.
quote I read to close out my part of this episode is they were talking about this AI and Bitcoin, how much things have gone up. And the quote was, the problem is in a bubble isn't usually that the story is wrong, but the price is wrong, right? We all know that AI has a lot of benefits. It's used in a lot of different things. We know that Bitcoin and blockchain seems to have some benefits there. So it's not the story, it's the price. And at some point, the price can be wrong, Bob.
Oh, I love that. The price is wrong about that. That's awesome. Brett, thank you for your charts today. This was an excellent episode. NVIDIA is doing wonderful things. They just released their latest chip called the Black Cell or Black Mark, something like that. And it's incredible what Jensen has been doing. A quick shout out to Jensen, who's the CEO of NVIDIA. He and I were texting earlier. Yeah, that's not true. He's been the CEO of NVIDIA, Brett, for how long?
40 years.
How many?
40?
Yeah, 1993. There you go.
Well, 30.
So, yeah, so I'm saying
Oops.
it's a long ass time. But a lot of folks are like, where did this guy come from? This gentleman had a wonderful little quote that went generally pretty viral. And I'm going to wish upon you what he wished upon all the graduates of the Stanford class that he was speaking to. I wish you pain and suffering because it is only through pain and suffering that we build resilience to be the CEO of a company for 30 years and look like an overnight success.
Wow, that's going on in your shower tonight for your son.
It was so
Beautiful.
beautiful. Oh, you know, I sent him that link 15 times since it came out last Thursday.
To more pain and suffering.
The pain and suffering.
Have a good one.